All right, well, let me say hello and welcome to another Whiteboard lesson. Doug here with the LincolnList.com. Today we've got a great topic, and that will be which one is better, day trading or swing trading? Which one can you make more money at? So we're going to talk about that here in just a minute. But before I get started, if you like this video, click that you like it. If you want to show your support for this channel and you want to keep up to date with these whiteboard lessons, the happy hours, the market muttering, show your support by subscribing to the channel. And don't forget, I'm going to post a link that'll direct you to the educational section of our website. It's recently been updated. We have over 100 hours of free content. We also have paid content. So for those that are looking to take their trading to another level, you'll find the educational content you need right there at the Lincoln List. So let's go ahead and get into it. Which one is better, swing trading or day trading? Well, the easy answer to this would be whichever one works for you, whichever one fits your profile. Now, I know that most of you that came to this video probably don't know what that really is. That's why you clicked on the video, right? You don't know whether day trading is better for you or is swing trading better for you. Will you excel more in day trading? Will you excel more in swing trading? And this is all part of your development as a trader. We all go through this identity in the very beginning, and when we're struggling, and some of us that start out, we don't know where we're going to fit in. We don't know if we're going to be a great options trader or a great stock trader or a great foreign currency trader or a great futures trader. Some of us kind of bounced around for year after year or month after month, trying to learn a system or trying to inherit something that we can really get behind. And this is part of growing as a trader, is figuring out what your trader identity. And as I said, so many of these whiteboards and other past lessons, you can excel at anything. You just have to find something that you can click with that fits your personality and fits your goals as a trader, and that's where you're going to start to succeed. So I'm going to try to give you the advantages and disadvantages of each one of these today, and then you can kind of decide for yourself which one that you think you would probably excel at from there. So just so we're all on the same page, because there could be some new people just watching this video for the first time, you may not even know what the difference is between day trading and swing trading. So we'll start out with there. Day trading is pretty self-explanatory, and that is just trading throughout the day. So the philosophy behind a day trader is that you're going to open up a position and you're going to be cash at the end of the day, and you're going to make trades throughout that day. But the purpose of day trading is to make your money and to make your trades during business hours while the market is open, and your intent is to close most of those positions throughout the day. So you're trading just the day. Now, a swing trader is someone who's trading swings, that's where it comes from, swings within the stock. So you're trading something that's multiple days. Now, the difference that separates this person from an investor is an investor is looking for a really long-term horizon, maybe a year or 2 years. Swing traders, also sometimes momentum traders, are trying to take or capture a portion of a stock over a period of days, sometimes weeks, maybe even as long as a month, in a particular stock or in a particular instrument. Now, once we look at that, we want to talk about the philosophies that go behind how each one of these groups actually profit. Because the way a day trader looks at the market is different than a swing trader looks at the market. And the way an investor looks at the market is completely different than both of them. And this is important for you to understand, because you have to be in that right mindset, because things that are important to a day trader are probably not important to a swing trader in every case. And those things that are important to a day trader don't mean jack to an investor, and vice versa, okay? So when we talked about day trading, the purpose is to make a trade within the day. Now, for the sake of time, I can't go through every little nuance about day trading and swing trading, but I'm going to highlight the most popular and most important topics. When you're talking about day trading, the success from a day trader comes from speed, sorry about my penmanship. Speed and precision. It comes from speed and precision. So how a day trader normally approaches a piece of business or during the business day is they're trying to capture an inflection point of a stock. So sometimes that speed as well works as in timing, okay? You will have to possess speed, precision, and timing in an impeccable manner to be a successful day trader, because the philosophy is you want to put weight behind a position, and because you're putting so much weight on it, and when I say weight, position size, you're leaning into something heavy, okay, and you're doing that and you're trying to time the exact moment within, a minute or two, 20 minutes or so, depending on your strategy. But you're trying to time the exact moment a stock is going to explode to the upside, or if you're short, explode to the downside. So a day trader's whole philosophy and the way they run their business is based on speed, precision, and timing. Now, when you look at it that way, and we say speed and precision, there's certain things that don't matter when you're making that decision. Because when a day trader looks at a trade, that profit, let's say called the profit time, profit horizon, or however long you intend on being in that trade, may be 1 minute for some traders, maybe 5 minutes, 20 minutes, or a half an hour. So let's just say as an average, we're talking about 30 minutes worth of a trade. That's how long a day trader would be. Now everybody's different. I'm just giving a benchmark so we can use it for an example. But let's say an average trader is 30 minutes into a trade. Now if you're only going to be in a trade for 30 minutes, and because the market moves so quickly, and everything that you do as a day trader depends on speed, depends on timing, and depends on accuracy, you don't have time to worry about things that maybe a swing trader or an investor would worry about, such as what the profits and losses are for that company, what the retained earnings are, how you feel personally about the CEO. You're not going to be in the trade long enough for any of that stuff to matter. Now, maybe you're looking at a news article or something that caused this initial inflection point or caused this initial bump, and you're aware of that. And you know that this particular move isn't going to last very long. But you're okay with that because your precision, your accuracy, your plan has that in it so you can catch it at the right moment. And those things are not important to the day trader because they're not going to be in it long enough. So if the company's reporting earnings later in the week, that's not necessarily important because they're not going to be in it for the rest. Now, when a swing trader, they do things a little bit differently. They're going to have to prepare for days on end, maybe 1 day, 2 days, 5 days, a week. So what they're doing in difference to a day trader is they're allowing a stock or a particular instrument to move farther in price. So where a day trader may be using anywhere from, if you're a scalper, like 30 cents to $5 on some big beta names, or even more, depending on the move. But they're playing within these ranges. Now, a swing trader is looking for things that take place over a period of days, sometimes weeks, and they might be looking for a $10 to a $20 move on a stock. So they're giving it time. Now, when you look at it, they're not dependent on speed necessarily, and they're not dependent on accuracy and precision. So things like entry prices, it matters more to a day trader. It matters less to a swing trader. It still matters, but they can be off by 15 or 20 cents, or they can chase a move by 30 or 50 cents if they intend on holding it until $5, $10, $20 down the road, if that's part of their plan. A day trader can't do that because that's part of their profit. A swing trader, because they're giving it more time, can capture a larger move. So in essence, it doesn't always work this way, but a day trader is trading more times, capturing smaller moves, but using larger sizes to do it, and they're containing it as profit, like it's a real job, like their daily work, daily pay. A swing trader is allowing things to develop. So as a swing trader, you don't need to be so accurate. You don't have to have perfect timing, and you don't have to have precision. You're allowing things to work. Now, when you talk about what are the disadvantages of this, well, some people just are not quick enough. You just can't develop that speed because you second guess yourself, you stall, and that could kill you as a day trader. Not kill you completely and ruin your account, but it can cause you to miss out on opportunities. Every penny as a day trader is important. So that's the disadvantages, is that you are somewhat glued to your computer. You are heavily focused, and in periods of time through the day, you can't have any distractions because anything can happen at any moment. And if you put heavy weight down on a position, you can't just get up out of your chair and walk down the street. That might be disastrous, right? You can't do that. So you're trading something and you have a high level of focus. Now, a disadvantage for a swing trader will be something like overnight, which would be the biggest in my opinion, is overnight trading. Now, this at one time in the past, obviously in a serious bull market like we're in right now, it's different. But you have overnight risks. So there are many things that can happen overnight risk. There could be global financial crises, there could be wars, there could be CEO deaths. If you're trading biotechs, there could be decisions or deaths in patients. There could be all kinds of things that can happen overnight. There's all kinds of things that can happen over a weekend. And that puts a lot of risk on someone, because if you've traded things overnight, you've woke up to your stock gapping down or gapping up if you have been short. You just do not know, even though sometimes it seems like the market is calm and docile and sweet and gentle, it can get out of control and you have a lot of overnight risk. Now, a day trader doesn't have that overnight risk because they're closing it out. And a day trader can control risk because they're trading within the day and they can use a stop on their trade. So they can be 20 cents, 30 cents, 50 cents, $1 stop. They already know what their loss is going to be. Now, a swing trader could put a stop in, obviously, but there's always a chance going through earnings or something, another event, where that drawdown can get pretty high. You can go right through your stops from a gap down. And that would be the next part, would be the drawdowns. You always hear, I don't know what I was drawing there. You always hear the stories. If you would have bought Amazon in 2004 and held it today, you'd have $25 million. Or if you bought Walmart on IPO day, you'd have $35 million today. Those are true statements, but I don't like those statements too much, because what that tells you is that you're going to hold through all these drawdowns. You're going to have to deal with that. So if you're an actual trader or investor or swing trading something like that, you realize if you look at a long-term chart of Amazon, that stock was dead money for a decade. So you had to hold through all that. You also had to hold it through the financial crisis. You had to hold it through the tech bubble. And you had to do it with all of those. So you have to ask yourself, am I somebody that can hold these? Because if you're letting something develop over 10, 20 days, are you going to be able to do that? Do you have enough patience to do that? Or are you going to be someone over here on this side that excels better in day trading because you want to know now? You don't want the overnight risk. You want to be able to make money. So when you look at them, they both can make money. Generally, I would say statistically, people will do better with swing trading because you're not trying to time the market. Timing the market has always been a tough concept. And when you look at day trading, that's going to be its biggest negativity or its biggest challenge for someone, is your precision in your timing has to be perfect or very close to perfect. And it's hard to do that consistently in a market. But on the other hand, when you're swing trading, you're allowing things to develop. You're able to catch larger swings in a stock, larger percentage moves dollar-wise out of something, because you're giving it the flexibility and you're giving it the patience for it to develop. However, you have to have the patience to do that, because where, let's say, each one of them, a day trader might be able to make $1,000 or $2,000 in the first hour of trading, where the swing trader might need a week or 2 weeks or 3 weeks, or they'll maybe get 1,000 one time and then 10,000 or 20,000 later on. They're going to have to wait a little longer for their money. So those would be the basic differences. You have to decide what you want to do as a trader. You can succeed in either one of them. But if you're going to take trading as a profession, you're going to need to focus on one more than the other, because it's kind of hard to be a professional day trader and a great professional swing trader just because of the amount of time that it takes to focus and concentrate on your business. You can do it. There's several people that are doing it. But when you're trying to make money at this, you want to focus on your edge. You want to find which one is going to do you better, fit your goals better, fit your personality. Don't let me tell you which one is the right one for you. You decide. Try some swing trades. Try some day trades. See which kind of lifestyle will be easier for you to live, and that's where you need to be. If you need a little help with that, spend some more time, visit thelinkenlist.com, look at that educational material, learn more about swing trading and day trading. Again, if you like the video, click that you like it. Thanks for watching this week's Whiteboard. I do appreciate it. Until next time, trade well.